Given the current price trend and the bearish forecast for Bitcoin, a short-term bearish strategy appears to be the most suitable. The recent price history shows a downward trend, with prices dipping below the key support level. The forecast also anticipates further declines in the coming week. Therefore, it is prudent to capitalize on this bearish momentum. To execute this strategy, we can initiate a short position at the entry price of $94,700. This price point is slightly above the current market price and offers a small margin of safety. A stop-loss order can be set at $95,300, ensuring limited downside risk if the price unexpectedly rallies. The target price for this trade should be $91,152, the identified support level. This target price offers a reasonable profit potential while aligning with the bearish market outlook. Based on the provided information about Bitcoin Cash, a cautious approach with a medium-term investment perspective appears most suitable. The 2-week price change showcases a lack of clear direction, with the price fluctuating around a relatively narrow range. The forecast suggests a continued downward trend, with prices potentially dipping below the current level. However, the support price at $437.50 acts as a potential floor, preventing a sharp and sudden decline. Therefore, a long position is not recommended at this time due to the uncertain outlook and potential for further price drops. A short position could be considered, but it carries inherent risk due to the proximity of the support price. A more prudent strategy would involve waiting for a clearer price signal, such as a decisive break below the support level or a strong upward reversal, before entering a position. This approach allows for a more informed decision and minimizes the risk of capital loss in a volatile market environment. Given the provided price information for stacks, a short-term bearish investment strategy appears most suitable. The 2-week price history shows a clear downward trend, with the price hovering around the support level of $1.366. The forecast further reinforces this bearish outlook, projecting a decline in price over the next week. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price, which is slightly above the support level. A stop-loss order should be placed at $1.514, the resistance level, to limit potential losses if the price unexpectedly rises. The target price should be set at $1.366, the support level, aiming to capitalize on the anticipated price decline. This strategy leverages the current market conditions and the bearish forecast to potentially generate profits in the short term. Based on the provided information about Ethereum, a cautious investment strategy is recommended. While the historical price shows some volatility, the forecast indicates a slight downward trend in the coming week. The current price sits near the support level of $3,333.69, suggesting potential buying opportunities for those with a medium-term investment horizon. Therefore, a long position is suggested for a medium-term investment strategy. A suitable entry price would be around $3,350, slightly above the support level. The stop loss should be placed at $3,300 to limit potential losses if the price drops below the support level. The target price could be set at $3,490, aligning with the resistance level and aiming for a potential price increase in the medium term. This strategy aims to capitalize on the potential for Ethereum to rebound and move towards its resistance level while mitigating risks through a well-defined stop loss. Based on the provided Ripple price information, a short-term investment strategy appears to be the most suitable approach. The 2-week price history shows a generally downward trend, with the forecast predicting further declines. Although the support price is at $1.9283, the current price is significantly above this level, suggesting a potential for a further drop before finding support. Therefore, a short position is recommended. An entry price of $2.20, aligning with the resistance level, would allow you to capitalize on the anticipated decline. A stop loss at $2.27 would limit potential losses if the price unexpectedly rises. The target price should be set at $2.05, a conservative level that provides a reasonable profit margin while avoiding the risk of chasing the price down to the support level. This strategy aims to capitalize on the short-term bearish momentum in Ripple. Based on the provided price information for Binance Coin, a medium-term investment strategy appears to be the most suitable. The historical price data shows a fluctuating trend with periods of both upward and downward movement. The forecast indicates a slight upward trend over the next week, suggesting potential for growth. However, the resistance level of $723.38 presents a significant hurdle for sustained upward momentum. Therefore, a long position is recommended for a medium-term investment horizon. The entry price should be around $695, strategically positioned below the current price to allow for potential price consolidation before entering a bullish trend. A stop loss should be set at $689.88, the support price, to limit potential losses. The target price should be set at $719, aligning with the highest forecasted price and allowing for a reasonable profit margin. This strategy aims to capitalize on the anticipated upward momentum while managing risk effectively. Based on the provided historical price data and the forecast for Stellar, a cautious short-term investment strategy is recommended. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price is at $0.232, while the resistance is at $0.3557. Given this bearish outlook, a short position would be more suitable. To implement this strategy, an entry price of $0.350 could be considered, slightly above the current price and below the resistance level. A stop loss should be set at $0.360 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.300, aiming to capture a portion of the anticipated decline towards the support level. This approach allows for a modest profit potential while managing risk effectively in the short term. Given the price trends and forecast for Toncoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight upward trend, but the forecast suggests a slight downward movement over the next week. The current price is close to the resistance level of $5.645, indicating a potential for a pullback. The support price sits at $5.214, which could act as a floor for the price. Therefore, a short position would be advisable to capitalize on the potential for a price decline towards the support level. An entry price of $5.60 would allow you to enter the trade near the resistance level. The stop loss should be set at $5.65 to protect against any unexpected price surges. The target price should be set at $5.30, aiming to capture a decent portion of the potential downside movement. This strategy balances risk and reward by targeting a reasonable profit while minimizing potential losses. Given the price trends and forecast for Cardano, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a slight downward trend, with the current price hovering near the support level of $0.8567. The forecast suggests Cardano could dip further to around $0.845 in the coming week. However, the resistance level at $0.883 indicates that there might be a rebound potential. Therefore, a short position is recommended for a short-term investment strategy. An entry price of $0.877, slightly above the current price, would allow you to enter the trade as the price potentially pulls back towards the support level. The stop loss should be set at $0.889 to minimize potential losses if the price unexpectedly surges. The target price can be set at $0.8567, aligning with the support level, aiming to capture a profit from the anticipated price decline. This strategy aims to capitalize on the short-term volatility while managing risk effectively. Given the Litecoin price data and forecast, a short-term investment strategy appears most suitable. The historical prices show a slight downward trend, and the forecast predicts continued declines. The current price is near the resistance level of $104.77, suggesting a potential for a pullback. Therefore, a short position is recommended. An entry price of $103.50 allows for a quick entry before a potential price drop. The stop loss should be set at $105.50 to protect against an unexpected price surge. The target price can be set at $99.50, aiming to capture a decent portion of the anticipated decline. This strategy capitalizes on the short-term bearish outlook for Litecoin while managing risk effectively. The current price trend for SWAY coin, as indicated by the recent price history, shows some volatility with a slight downward bias. The forecast price suggests a continuation of this downward trend, with prices potentially dipping further in the coming week. Considering these factors, a short-term short position on SWAY coin appears to be the most suitable strategy. An entry price around $4.25, aligning with the forecasted price, would allow you to capitalize on the anticipated decline. The stop loss should be set at $4.36, slightly above the current price, to limit potential losses if the market unexpectedly rallies. The target price can be set at $4.08, based on the historical price lows and the forecast, allowing you to secure profits before the price potentially rebounds. This strategy aims to take advantage of the short-term bearish sentiment in SWAY coin, while managing risk through a well-defined stop loss. Based on the provided price information for Aptos, a cautious investment strategy focusing on the short term appears most suitable. The 2-week price change reveals a downward trend, and the forecast suggests further declines over the next week. The support price sits at $8.74, indicating a potential floor for the price. However, the resistance level is relatively high at $11.86, suggesting an uphill battle for Aptos to regain its upward momentum. Therefore, a short position on Aptos is recommended. An entry price around $9.19, slightly above the current price and below the recent high, would allow for a favorable risk-reward ratio. The stop loss should be set at $9.55 to limit potential losses if the price unexpectedly rises. The target price could be set at $8.74, aligning with the support level, aiming to capture a portion of the anticipated decline. This strategy prioritizes risk management and capital preservation while seeking to capitalize on the prevailing bearish sentiment surrounding Aptos. Based on the provided SHIB price information, a short-term investment strategy appears to be the most prudent approach. The historical price data suggests a recent downward trend, with the forecast indicating further declines over the next week. The current price is hovering near the resistance level, indicating a potential for a pullback. Therefore, a short position is recommended. An entry price of $0.427, aligned with the current price, would be suitable. The stop loss should be set at $0.456, slightly above the recent high, to limit potential losses. The target price could be set at $0.391, aligning with the lowest forecast price, allowing for a reasonable profit potential while minimizing risk. Based on the provided information for Ethereum Classic, a cautious investment strategy would be to adopt a short-term position. The price history reveals a downward trend, and the forecast suggests further declines. While the support price at $24.33 offers a potential floor, the resistance at $27.32 suggests limited upward momentum. Therefore, a short position appears more promising. To execute this strategy, consider entering a short position at the current price of $25, with a stop loss set at $26. This stop loss protects against unexpected price surges. The target price should be set at $24.33, aligning with the support level. This strategy aims to capitalize on the anticipated price decline while mitigating potential losses. Based on the Polygon price information provided, a cautious short-term investment strategy is recommended. The 2-week price history demonstrates a clear downward trend, with the forecast indicating further declines in the coming week. The current price is hovering near the resistance level of $0.5154, suggesting a potential for a short-term pullback. Therefore, a short position on Polygon is advisable. An entry price around $0.490, slightly above the current price, would allow for a small margin of safety. The stop loss should be set at $0.515, above the resistance level, to minimize potential losses. The target price could be set at $0.460, aligning with the forecasted price decline and offering a reasonable profit potential. This strategy capitalizes on the bearish sentiment and potential short-term price correction while managing risk effectively. Based on the provided price information for AEVO, a cautious short-term investment strategy appears most suitable. The 2-week price history shows a general downward trend, with the forecast indicating further declines in the coming week. The price currently sits near its support level of $0.3319, suggesting potential for further downward movement. Therefore, a short position is recommended. An entry price of $0.365 could be considered, allowing for a small buffer above the current price. The stop loss should be set at $0.379 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.332, aiming to capture a portion of the anticipated decline towards the support level. This strategy prioritizes risk management while seeking to capitalize on the bearish outlook for AEVO in the short term. Given the price trends and forecast for optimism, a short-term investment strategy appears most suitable. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests optimism could drop from its current price to as low as $1.72. The support price sits at $1.784 and resistance at $1.92. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve an entry price of $1.85, aligning with the current price and the downward forecast. The stop loss should be set at $1.92 to protect against any unexpected price recovery. The target price should be set at $1.75, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $1.784. Given the provided price data and forecast for STRK, a cautious investment strategy with a medium-term perspective is recommended. The historical price data reveals a downward trend, with the recent price hovering near the support level of $0.4667. The forecast suggests further price declines in the coming week, reaching as low as $0.446. This indicates a bearish outlook in the short to medium term. Therefore, a short position on STRK is advisable. An entry price of $0.475, slightly above the current price, would allow for some room for potential price fluctuations before entering the short position. The stop loss should be set at $0.483, the nearest resistance level, to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.448, slightly above the forecasted lowest price, aiming to capture potential profits from the anticipated decline. This strategy aims to capitalize on the downward price trend while mitigating risk through a well-defined stop loss. Given the price trends and forecast for Solana, a short-term investment strategy appears prudent. The historical prices demonstrate a slight downward trend, while the forecast predicts a further decline in the coming week. The support price at $184.22 suggests a potential floor for the price, while the resistance at $197.53 indicates a ceiling for upward movement. Therefore, a short position on Solana is recommended. An aggressive entry price would be $191, aligning with the forecast and the current price. A stop loss should be placed at $197 to protect against unexpected price surges. The target price for this short position could be set at $184, aiming to capitalize on the anticipated decline while staying above the support level. This strategy allows for potential profit from the predicted price movement while minimizing risk through a well-defined stop loss. Based on the provided price history and forecast for Jupiter, a short-term bearish strategy appears to be the most suitable approach. The historical price data shows a general downward trend, with recent prices hovering close to the support level of $0.7993. The forecast further reinforces this bearish outlook, projecting prices to decline over the next week. Therefore, a short position on Jupiter is recommended, aiming to profit from the anticipated price decrease. An entry price of $0.814, slightly above the current price, allows for a small margin of safety. The stop loss should be set at $0.843, above the recent high, to limit potential losses. The target price could be set at $0.7993, aligning with the support level and aiming to capture a significant portion of the expected price decline. This strategy capitalizes on the short-term bearish momentum while managing risk through a well-defined stop-loss order. Given the price trends and forecast for render, a cautious investment strategy would focus on a short-term approach. The historical prices show a fluctuating trend, with the current price hovering near its support level of $5.059. The forecast indicates a potential decline in price over the next week. This suggests a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated price decrease. An entry price of $6.81, aligning with the recent price dip, would be suitable. A stop loss should be placed at $7.16 to limit potential losses if the price unexpectedly surges. The target price could be set at $5.50, allowing for a reasonable profit margin before reaching the support level. This strategy aims to mitigate risk while taking advantage of the potential for a short-term price decline in render. Given the price trends and forecast for Solana name service, a cautious investment strategy would focus on a short-term approach. The historical prices show a general downward trend, with the current price hovering near the support level of $0.2404. The forecast indicates further price declines, suggesting a bearish outlook in the short term. While there is a slight upward movement in the forecast towards the end, the overall trend remains negative. Considering this, a short position is advisable to capitalize on the anticipated price decrease. An entry price of $0.255, near the current price and above the support level, allows for a reasonable margin of safety. The stop loss should be set at $0.265 to protect against any unexpected upward movement. The target price could be set at $0.240, aiming to capture a portion of the potential decline towards the support level. This strategy emphasizes risk management and capital preservation, taking advantage of the short-term bearish outlook for Solana name service. Based on the provided historical price data and the forecast for Doge-Coin, a cautious short-term investment strategy is recommended. The historical prices show a recent decline, and the forecast indicates further potential decreases in the coming week. The support price at $0.31201 suggests a potential floor for the price, while the resistance at $0.33436 indicates a significant hurdle for upward movement. Considering this outlook, a short position is advisable. An aggressive entry point would be around $0.325, aiming to capitalize on the anticipated decline. The stop loss should be set at $0.330 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.300, allowing for a reasonable profit margin before the price potentially reaches the support level. This strategy allows for potential gains while mitigating risk through a well-defined stop loss. Given the provided price history and forecast for PEPE, a short-term investment strategy appears most suitable. The historical data suggests a period of consolidation with some minor fluctuations. While the forecast indicates a slight downward trend, it remains relatively close to the current price levels. This indicates a potential for short-term volatility that can be capitalized upon. Therefore, an aggressive short-term strategy would involve entering a short position at the current market price, around $0.0000185. The stop loss should be set slightly above the recent high of $0.0000187 to minimize potential losses. The target price could be set at $0.0000181, aligning with the forecast's lower end. This strategy aims to profit from any downward movement within the short term, taking advantage of the predicted price dip while managing risk with a defined stop loss. Given the current price trends and the provided forecast for SHIB Inu, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, and the forecast suggests a continued decline in the coming week. The support price sits at $0.00000191, indicating a potential floor for the price. The resistance level at $0.00000228 suggests limited upside potential. In this scenario, a short position appears to be more suitable for capitalizing on the anticipated price decrease. An entry price of $0.00000217, aligning with the current price and near the peak of the recent range, would be appropriate. The stop loss should be set at $0.00000221 to minimize potential losses if the price unexpectedly rises. The target price could be set at $0.00000195, aiming to capture a portion of the anticipated decline while staying above the support level. This strategy allows for potential profit from the short-term price movement while managing risk effectively. Based on the provided price information for Dog with Hat, a short-term bearish investment strategy appears most suitable. The historical price data reveals a downward trend, with the forecast indicating further declines over the next week. The price is currently hovering near the resistance level of $2.309, suggesting a potential for a pullback. Therefore, an aggressive short-term strategy would involve taking a short position at the current price of around $1.92. The stop loss should be set at $2.03 to limit potential losses if the price unexpectedly rises. The target price could be set at $1.63, aligning with the lowest forecast price, allowing for a profit before the market potentially finds support. This strategy aims to capitalize on the anticipated downward momentum in the short term. Based on the provided Doge-Coin price data, a bearish short-term investment strategy appears to be the most suitable approach. The 2-week price history demonstrates a downward trend, and the forecast suggests further declines in the coming week. The price is currently hovering near its recent support level, indicating a potential for further downward movement. Therefore, I recommend a short position on Doge-Coin. An ideal entry price would be around $0.00642, aligning with the current price and the downward trend. To manage risk, a stop loss should be placed at $0.00666, slightly above the recent high. The target price could be set at $0.00588, based on the forecast, allowing for potential profits before reaching the significant support level. This strategy capitalizes on the anticipated price decline while implementing risk management measures to protect against unexpected price reversals. Given the price trends and forecast for Near Protocol, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering around the support level of $4.246. The forecast indicates further declines, suggesting Near Protocol might drop towards $4.81 in the coming week. This bearish outlook in the short term makes a short position the most suitable strategy to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $5.12 would be ideal, aligning with the current price and the forecasted price. The stop loss should be set at $5.35 to protect against any unexpected price recovery. The target price should be set at $4.86, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $4.246. Based on the provided internet computer price information, a cautious investment strategy is recommended. The 2-week price history reveals a downward trend, with the forecast projecting further declines. Although the support price at $9.422 provides a potential floor, the resistance at $11.102 suggests limited upward momentum. Considering these factors, a short position appears more suitable. An entry price of $10 aligns with the current price and the forecasted decline. The stop loss should be set at $10.20 to minimize potential losses if the price unexpectedly surges. The target price can be set at $9.50, aiming to capitalize on the anticipated price drop towards the support level. This strategy prioritizes risk management while seeking to profit from the prevailing bearish sentiment surrounding internet computer. Based on the provided information for Injective, a bearish investment strategy appears more suitable. The 2-week price history shows a clear downward trend, and the forecast predicts continued declines. The support price at $16.37 suggests a potential floor for the price, while the resistance at $22.60 indicates a significant hurdle for upward movement. Considering this outlook, a short position on Injective is recommended. An aggressive entry price could be around $21, aligning with the current price and the recent price trend. A stop-loss order should be placed at $22, slightly above the entry price to minimize potential losses if the price unexpectedly rises. A target price of $17 would offer a reasonable profit margin, capturing a portion of the anticipated decline while staying above the support level. This strategy capitalizes on the bearish momentum while managing risk through a well-defined stop-loss order. Given the provided price history and forecast for BTC, a short-term bearish strategy appears to be the most suitable. The 2-week price change demonstrates a downward trend, and the forecast predicts further declines over the coming week. The historical prices have been fluctuating around a range, with recent dips suggesting a potential continuation of the downward movement. The support price at $246 serves as a potential floor for the price, while the resistance at $480.70 acts as a ceiling, limiting significant upward potential. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price, around $473. A stop-loss should be placed at $484, slightly above the recent high, to protect against unexpected upward price movements. The target price would be set at $436, aligning with the lowest predicted price in the forecast, allowing for a potential profit while minimizing risk. This strategy aims to capitalize on the anticipated decline in BTC's price within the short term. Based on the provided information for THETA network, a short-term investment strategy appears most suitable. The historical price data reveals a recent period of consolidation, with prices fluctuating around the $2.20 to $2.40 range. The forecast price suggests a continuation of this sideways trend, with prices hovering around the $2.30 mark over the next week. Given the limited upside potential and the presence of a support level at $2.155, a short position could be considered. An entry price of $2.32, slightly above the current price, allows for a small margin of safety while aligning with the forecast. The stop-loss should be set at $2.37, the immediate resistance level, to limit potential losses. The target price could be set at $2.15, aiming to capitalize on a potential pullback towards the support level. This strategy emphasizes capital preservation while seeking modest gains in a volatile market environment. Remember, this is just a suggestion, and thorough research and risk management are crucial before making any investment decisions. Based on the provided price history and forecast for WorldCoin, a short-term bearish investment strategy appears most suitable. The historical price data reveals a downward trend over the past 2 weeks, with the forecast projecting further declines in the coming week. The support price sits at $1.979, indicating a potential floor for the price, while the resistance level at $2.177 suggests a ceiling for upward movement. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price of around $2.19. A stop-loss order should be placed at $2.23 to minimize potential losses if the price unexpectedly surges. The target price could be set at $1.98, aiming to capture a significant portion of the anticipated decline. This strategy capitalizes on the prevailing bearish sentiment and the forecast indicating further price drops in the short term. Based on the provided data for Hooked Protocol, a short-term investment strategy appears most suitable. The historical price data shows a slight upward trend, but the forecast indicates a slight downward movement in the coming week. This suggests a potential for a short-term pullback in price. Given the current price is close to the resistance level of $0.4429, it's likely that the price will encounter resistance and potentially decline towards the support level of $0.4044. Therefore, an aggressive short-term investment strategy for hooked protocol would involve taking a short position at the current price, with a stop loss set slightly above the current price to minimize risk. The target price would be set at the support level of $0.4044, aiming to capitalize on the potential price decline. This strategy leverages the potential for a short-term correction while mitigating risk through a well-defined stop-loss order. Artificial Superintelligence Alliance shows a 2-week downward trend in price, with the forecast predicting further declines. The price is currently hovering near the support level of $1.273, suggesting potential for further downside movement. The resistance level at $1.362 indicates a significant hurdle for potential upward price action. Given this bearish outlook and the forecast, a short position seems most suitable to capitalize on the anticipated decline in prices. To implement this strategy, an entry price of $1.31, aligned with the forecast, would be ideal. The stop loss should be set at $1.362, above the current price and the resistance level, to protect against any unexpected upward price movement. The target price could be set at $1.273, the support level, allowing for potential profit before the price reaches major support. This short-term investment strategy aims to capitalize on the anticipated price decline in Artificial Superintelligence Alliance, while mitigating risk through a well-defined stop loss. Polkadot's historical price data reveals a fluctuating trend with no clear upward or downward momentum. The forecast suggests a continued decline over the next week, aligning with the recent downward trend. Given this outlook, a short-term bearish strategy appears more suitable. An aggressive short-term investment strategy would involve entering a short position at the current price of around $6.96. The stop loss should be set at $7.12, slightly above the current price, to minimize potential losses if the price unexpectedly rises. The target price should be set at $6.49, aligning with the lowest forecasted price, allowing for potential profit capture before the market potentially rebounds. This strategy capitalizes on the anticipated decline in Polkadot's price over the short term. The provided price data for Filecoin suggests a recent period of consolidation with a slight downward trend. The forecast indicates further price decline in the coming week. Considering these factors, a short-term bearish strategy appears suitable. An entry point around $4.95, near the current price, could be considered. A stop-loss order at $5.19, slightly above the recent high, would limit potential losses. The target price could be set around $4.78, aligning with the lowest forecast price, allowing for profit-taking before further potential declines. This strategy capitalizes on the anticipated short-term price drop while managing risk through a defined stop loss. Based on the provided information for Conflux, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data reveals a fluctuating trend, indicating potential volatility in the near future. While the forecast suggests a gradual decline in price over the next week, the support price at $0.1398 provides a potential floor for the asset. Considering this, a long position could be initiated at the entry price of $0.161, aligning with the forecast's lowest point. A stop-loss order should be placed at $0.157, slightly below the recent price action and the predicted lowest point, to minimize potential losses. The target price could be set at $0.167, aiming to capitalize on a potential rebound towards the resistance level. This strategy allows for moderate risk while aiming for modest gains within a medium-term timeframe, taking advantage of potential price fluctuations. Based on the provided data for Ethereum name service, a cautious investment strategy focusing on the short term appears most suitable. The historical price data reveals a slight downward trend over the past 2 weeks, with the forecast indicating a continued decline. The support price sits at $32.88, while the resistance level is at $39.86. Considering the forecast and the proximity of the current price to the support level, entering a short position could be advantageous. A potential strategy involves setting an entry price at $33.50, slightly above the current price and the support level. This allows for some room for price fluctuations before entering the short position. The stop loss should be placed at $34.50, above the entry price, to limit potential losses. The target price could be set at $32, aiming to capitalize on the predicted decline towards the support level. This strategy prioritizes risk management by setting a stop loss and aims to profit from the anticipated downward price movement in the short term. Based on the provided avalanche price information, a cautious investment strategy is recommended. The historical price data reveals a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price is at $35.81, while the resistance is at $40.23. This suggests that Avalanche is currently in a bearish market condition. Therefore, a short position would be the most suitable strategy to capitalize on this anticipated decline. An entry price of $37, aligned with the recent price action and the forecasted decline, would be appropriate. The stop loss should be placed at $38 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $35, aiming to profit from the anticipated drop towards the support level. This strategy prioritizes risk management while seeking to capitalize on the prevailing bearish trend in Avalanche. Based on the provided price information for VeChain, a cautious medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with no clear upward or downward momentum. While the forecast suggests a slight decline over the next week, the support price at $0.02422 provides a strong safety net against significant losses. Considering these factors, a long position seems appropriate, aiming to capitalize on potential upward corrections within the medium term. An ideal entry price would be around $0.045, aligning with the current price and providing a buffer against immediate downside risk. The stop loss should be set at $0.0437, the recent historical low, to minimize potential losses. The target price could be set at $0.053, reflecting the recent high and allowing for a moderate profit potential. This strategy allows for potential upside while managing risk through a well-defined stop loss. Based on the provided price history and forecast for PENDLE, a short-term investment strategy appears most suitable. The historical prices show a slight downward trend, while the forecast suggests a continuation of this trend. The support price at $4.906 acts as a potential floor, while the resistance at $5.427 presents a hurdle for upward movement. Given this outlook, a short position is recommended. To execute this strategy, consider an entry price of $5.30, slightly above the current price and below the resistance level. A stop loss should be placed at $5.40, protecting against potential upward price movements. The target price could be set at $4.95, aiming to capture potential downside movement towards the support level. This short-term approach allows for capitalizing on the anticipated price decline while managing risk through a well-defined stop loss. The Sandbox price history shows a recent downward trend, with the forecast indicating further declines in the coming week. While the support price at $0.2742 provides a potential floor, the resistance level at $0.6071 suggests limited upside potential in the near term. Given this bearish outlook, a short-term short position on the Sandbox appears to be the most suitable strategy. An aggressive short-term investment strategy could involve entering a short position at the current price around $0.552. The stop loss should be set at $0.574 to protect against unexpected upward price movements. The target price could be set at $0.546, aiming to capitalize on the anticipated decline towards the support level. This strategy capitalizes on the perceived weakness in the Sandbox market and seeks to profit from the projected price decrease. Based on the provided Decentraland price history and forecast, a cautious investment strategy with a medium-term perspective is recommended. The historical price data shows a volatile trend with periods of both upward and downward movement. While the forecast suggests a slight downward trend in the coming weeks, the price remains close to its support level, indicating potential for a rebound. Therefore, a long position is considered appropriate for this strategy. An entry price around $0.495 would allow for a potential entry point near the current price levels. The stop loss should be set at $0.476, slightly below the recent lows, to minimize potential losses. The target price is set at $0.519, aiming to capitalize on a potential upward movement towards the resistance level. This strategy balances risk and reward by targeting a moderate gain while protecting against significant losses. Given the current price trend and forecast for ENG coin, a short-term bearish strategy appears most suitable. The historical price data reveals a downward trend over the past 2 weeks, with the forecast predicting further declines. The price is currently hovering near the resistance level of $0.2379, suggesting a potential for a pullback. A short position allows investors to profit from this anticipated decline. An aggressive short-term investment strategy could involve entering a short position at the current price of around $0.231. A stop-loss order should be placed at $0.246 to limit potential losses if the price unexpectedly rises. The target price should be set at $0.218, aligning with the forecasted low point, allowing investors to capitalize on the anticipated price drop while mitigating risk. Given the provided price history and forecast for Uniswap, a conservative investment strategy would involve a short-term perspective with a focus on potential price fluctuations around the support level. The historical prices show a relatively stable range with minor fluctuations, hovering around the support price of $13.018. The forecast also suggests a continuation of this trend with prices remaining around $13 for the next week. In this scenario, a short position could be considered as a potential strategy. An entry price around $13.10 would allow for a small margin above the support price, providing some buffer against unexpected price surges. The stop loss could be set at $13.20 to limit potential losses. The target price could be set at $12.90, aiming to capture a small profit from a potential dip towards the support level. This strategy prioritizes risk management and capital preservation, aiming to profit from minor price movements within the established range. Based on the provided Chainlink price information, a cautious investment strategy is recommended for the medium term. The historical price data shows a downward trend, with the current price hovering near the support level of $18.99. The forecast indicates a continuation of this downward trend, with prices expected to fall to around $20. Considering this bearish outlook, a short position is advisable. An entry price of $21.50 would allow for a reasonable margin above the current price and potential for a price dip before hitting the support level. The stop loss should be set at $22.50 to limit potential losses if the price unexpectedly rebounds. The target price should be set at $19, aiming to capture a significant portion of the anticipated price decline. This strategy allows for a measured approach, capitalizing on the potential for downside movement while mitigating risks through a well-defined stop loss. Based on the historical price data and the provided forecast for Aave, an investment strategy centered around a medium-term perspective appears most suitable. The historical prices demonstrate a fluctuating trend with periods of both upward and downward movement. The current price is hovering near the support level, suggesting a potential for a rebound. The forecast indicates a slight upward movement in the coming week, further supporting a bullish outlook. Therefore, a long position is recommended for Aave. A strategic entry point would be around $330, aligning with the current price and offering a margin for potential price fluctuations. The stop loss should be set at $320 to mitigate risk in case of an unexpected downward move. The target price can be set at $360, aiming to capitalize on the forecasted upward movement and the historical resistance level. This approach allows for a balanced risk-reward profile while capitalizing on the potential for growth in the medium term. EOS shows a slight downward trend over the past 2 weeks, but the forecast suggests a potential rebound in the coming week. The price is currently hovering near the support level of $0.679, indicating a potential buying opportunity. Considering the forecast and the support level, a long-term investment strategy with a focus on buying and holding could be beneficial. An entry price around $0.775, which is slightly above the current price and below the resistance level, could be a good starting point. The stop loss should be placed at $0.679, the support level, to limit potential losses. The target price could be set at $0.8443, the resistance level, which represents a potential upside of around 8%. This strategy allows for a moderate risk and potential for moderate returns over the long term. Based on the provided data for Tron, the investment strategy should lean towards a short-term approach. The price history shows a slight downward trend over the past 2 weeks, and the forecast predicts further declines in the coming week. While the price is hovering near its support level of $0.2444, the resistance at $0.2594 indicates limited upside potential. Given this outlook, a short position appears to be the more favorable option. To execute this strategy, an entry price of $0.258 would be appropriate, aligning with the current price and the forecast. The stop loss should be set at $0.261, slightly above the current price, to protect against unexpected upward movements. The target price should be set at $0.245, aiming to capture potential downward momentum towards the support level. This short-term strategy capitalizes on the bearish trend and aims to generate profits within a relatively short timeframe. Based on the provided data for Suncoin, a medium-term investment strategy appears to be the most prudent approach. The recent price history demonstrates a slight upward trend, with a price range between $0.0206 and $0.0246. The forecast suggests further price appreciation, with the highest predicted price reaching $0.0247. This positive outlook, coupled with the current price hovering near the support level of $0.02249, indicates a potential for continued growth in the medium term. Therefore, a long position is recommended. An ideal entry point would be around $0.023, slightly below the current price, allowing for a margin of safety. A stop-loss order should be placed at $0.022, safeguarding against a potential price drop below the support level. The target price could be set at $0.025, aiming to capitalize on the projected price increase and reach the resistance level. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses.